Well, g'day there traders and friends, market participants and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading. What this video is going to be is that of a market address, a bit of an update when it comes to some of the stocks we have been in recently, also some of the current trading positions that are open, and a couple also that have caught my eye moving forward. We are going to go back retrospectively and talk about the following stocks: Netflix, Boeing Airlines, Google, GLD, which is very interesting, and also Delta Airlines, LUV, and EWZ too. Now, of course, the markets are going to be closed on Monday in observance of the Memorial Day holiday. So to my United States friends tuning in and listening to this, market recap or address, I wish you a very nice long weekend, and I do hope you take the time to, of course, understand and essentially celebrate the importance of what is Memorial Day. The markets will be abbreviated Tuesday through Friday. However, I do think we are going to potentially see a lot of fireworks when it comes to the market open and the action for the week upcoming, which is relatively exciting. Also, if you have any questions about this analysis or what I'm talking about, please email me. The email address is in the link below. It is success@pivotpoint-trading.com. Yesterday, I sat down and provided those in that pro analysis class, about 90 minutes of analysis. We recapped the US financial markets. Also, we spoke about the transportational average and the Russell 2000, not to mention the stocks on the left-hand side of my screen in comprehensive detail, or at least we went through these with pretty concise analysis. We also spoke about a lot of externalities that we have been looking at and focusing on for the past number of weeks. We're still trying to come to a good sort of replacement as to the Goldman Sachs that we have sort of oscillated out of this left-hand sort of footnote of these stocks. And as it stands at the moment, what we're doing is we're throwing in a bunch of additional stocks. I think we spoke about maybe 4 or 5 yesterday. And when we get settled, or at least find a little bit of a consensus on what stock it should be, that individual stock will come into our top 12 list over here and replace Goldman Sachs that was cycled out a couple of weeks ago. So again, email me anytime if you have any questions whatsoever. Don't be timid. You can always reach out. If not, have a look into that pro analysis class as well. It's a great workshop, so to speak, of analysis, the application of analysis to the real world, real-time sort of markets moving forward. A great analysis tool as we head into the week upcoming. All right, so having said that, first of all, let me start with Boeing Airlines, because Boeing Airlines was one of the stocks that we oscillated out of this week. It happened on Monday. We hit our first target at $356 per share. We entered into this trade over here. This was the 7th of May at $336. This was essentially a $20 move with those call option contracts. Now, the good news is that once we established this gap, we've come on back down and we're trying to fill it. In fact, we did fill it. We filled it on Wednesday and it's starting to stabilize. So there are a bunch of people emailing in still with a few contracts, or at least they haven't sold out of the original position in its entirety. And they're asking, well, what do we do with it? And the answer to that question is, well, you can choose what you want to do with it. You can sell more or less the entire position at this level. I still think it's going to move to 369. And if in fact it does hit this level, it's a good opportunity to more or less liquidate that entire position. There's a good chance that Boeing Airlines is going to get stuck pretty much where it's currently trading at as at the close on Friday. And what we're going to have to do is just roll through, of course, the movements of this stock when it sets up the perimeters, the short-term perimeters of support and resistance up and around this 360 pivot that we've defined as our first target. Above all else, Boeing Airlines has been a fantastic trade. It ran $20 very quickly, and a lot of people made some pretty decent profit with those call options that, above all else, I'm very happy about, and I congratulate you for taking that Boeing Airlines trade. It's worked out tremendously well. Now, the next stock I want to talk about is Netflix. This is a position that we were triggered into towards the end of the week, really Wednesday through Friday. It started moving. You can see for yourself the breakout entry is 342.34. Again, a lot of people jumping into Netflix. What's good about this also is that we're starting to see expanding volume behind this breakout move. And if I bring up the commodity channel index, you can see for yourself we're breaking above that 100 line with the ADX turning up, establishing the legitimacy of the trend breakout. So this is very exciting on Netflix. This is a current open position, unlike that of Boeing Airlines, or at least a portion of those contracts may be open still on Boeing Airlines. Both are profitable. And the good news about this is that if you sort of interlink this, so to speak, with our market analysis, with the industrial average, the S&P, and even the NASDAQ, or not to mention the Russell 2000, you'll understand that the markets themselves are relatively bullish. Yes, there is the possibility that we may see that of a pullback, but we more or less saw that really on Wednesday and Thursday. And that was why I gave you that update, I think, on Tuesday evening as we moved into Wednesday morning session worth of trade, because what I spoke about in terms of the market potentially pulling on back down and setting up a bunch bunch of false sort of whipsaws for a bunch of people looking to go short, more or less played out to the T. And as you can see, and I've been speaking about this very openly, is that a lot of these big companies that we follow are still overwhelmingly bullish. And what I mean by that is that they're still holding up above their long-term simples. They're still holding above those shorter-term exponential moving averages. And a lot, in fact, on the precipice of breaking above resistance areas. This sort of interrelates, or at least interconnects, into the analysis that I spoke about in Apple yesterday. So you can see for yourself that, look, Netflix is looking good. We entered at 342. It's sitting at 351. That's a very quick $9. Do I think this is the entirety of the move? No, I don't. This is the exciting part of technical trading, because when you position yourself nicely, these are the positions that you can just hold on to. And as the trend continues, we can just ride this trend higher. There is the possibility that we are going to get a back test of this pivot. This is coming in at about $330 per share. But it doesn't have to necessarily play out that way. Generally, you will get the 1, 2, 3 breakout, the retest of the support area, which was once old resistance, and then the trend will continue. But the good news is that if you're in this, you can sit back at this particular point with a smile on your face, and really, the ceiling on this may be all the way on up at $400 per share. It would be quite good to see this move $58, or at least build $58 of intrinsic value into those option contracts that we've already entered into on Netflix. I'm not saying it has to happen, but boy, wouldn't it be nice if Netflix just continues to trend above this 342 pivot. We're going to be focusing on this over the coming weeks and days, especially for the week upcoming. And it's something that you should be excited about and have on your watch list if you are not in it. And if you are, congratulations. Let's speak about Google. Google has slowed down a little bit, but again, it's sort of linking in with the temperament of the market itself sort of being stuck in the mud for the last 2 weeks. But at the same time, this is still another profitable trade. Really, 1,025 to 1,000 was the pivot that we've been looking to enter into this. This was at this green box of support. On Google, you can see that it accelerated very, very quickly. It overshot this resistance area. It was looking as though we were going to close the gap up here at 1,131. We didn't get there. We have that of a gravestone sort of shooting star candlestick over here. We pulled back a little bit, but it looks as though we're just successfully holding roughly this 1,075 handle. Now, the good news is that all of these positions are profitable, and there is still, of course, the chance and the opportunity that over the coming 4 sessions, even potentially this week upcoming, that we are going to see Google rally on up to 1,131. If you want to, you can always take profits at the closure of this gap. This is the gap which established itself Monday a couple of weeks ago on the 14th through to Tuesday. There is a short-term open window, but it is still in the bullish direction off from this macro support, which is going to and should sort of connect with this series or first series of lower highs. It's a really great target, and it also is the closure of this very important gap, which takes us back to March 2018 as well. So I'm liking the construction on Google, even though over the past 5 sessions, if I bring up the weekly chart, you can see we only moved $14, not a big move. But again, it's sort of put on hold that dark sort of moribose, or at least bearish counterattack or bearish piercing pattern that we saw 2 weeks ago. So I'm still liking the construction of Google, and above all else, it is quite profitable at this point. So again, I wanted to extend the congratulations to those who jumped into Google. Now, one commodity that we have been speaking about publicly, it's no surprise what's going on at the moment on gold, is that of gold. I mean, you can see for yourself what's going on. We've been speaking about this long-term sort of bullish trend line, or at least since it established itself in 2016. It looks as though we are in that of a continuation of a bullish move. Yes, commodities have been bearish since the peak, dating back to 2011, and we have been essentially waiting for the back test of this trend line. The back test of the trend line took place over the past 2 weeks. You can see this abrupt sell-off to the downside. When this happened, we started calling this potentially that of an exhaustion gap. And if you can pay attention to the actual candlestick since, you can see that there was no follow through to the downside. In fact, we stabilized, we made this sort of rounding bottom. We tagged this bullish trend line. This is on the weekly chart, or at least on the daily chart now, but you can see this extension, and now we're starting to potentially accelerate out of this support area. It means, I love this type of analysis where X marks the spot, and what I mean by that is when you've got horizontal sort of support or resistance, which begins to interconnect with the trend line as well. It makes a lot of sense that a lot of people gravitate around these areas, and what you can see in terms of volume is that we're starting to see volume spikes on the bullish candlesticks as well. We got a pretty decent gap between Wednesday and Thursday, a little bit of a slowdown on Friday, but this again is looking like, first of all, an exhaustion gap here, a rounding bottom, which is what I spoke about yesterday, and then potentially that of a reversal gap breaking out of this support area to the upside. So we were positioning ourselves down here at 122.88 for the bullish move off from this trend line. At the moment, there's a very, very low risk on this trade with some pretty decent reward moving forward. I mean, if this really gets moving, you've got the target up here at 128 or 127, just above this pivot. But if we see a reversal take place on the US dollar, and I know it looks quite strong at the moment, but I do believe that to be of an intermediate move back into the longer sort of primary bearish trend, which is underway and has been underway for a couple of years on the US dollar, well, that's really going to be sort of wind at our backs or in the sails to help GLD move higher over the coming weeks and months, if not multi-month type of move. And this might be just the beginning of it. So if we can clear the 130 handle moving forward, this is where it gets interesting. I know this chart is quite confusing if you're just looking at it, but you need to pay attention to this pivot up here, just shy of $150 per share. And you need to pay attention to this resistance area at 130 at the moment. So this is essentially our first target. I gave you 127 to 128, but say we get up to 130 over the coming weeks or months. And if we break above 130, and this is really the continuation of this trend since 2015-16, and we get above all of this multi-month chop, then this has got the potential to run all the way up to 157 or 147 very, very quickly as well. So I wanted to give you this update on GLD. It makes sense if you want to go long above 123.87. We might get stuck here for a little bit, and this may coincide with a little bit of US dollar volatility. But I needed to give you this update on GLD as well, something that is rather exciting as we look at the chart, because this technical picture, so to speak, is turning bullish very quickly. If you pay attention to the oscillators, you can see for yourself that yes, we have been into oversold conditions, but X marks the spot with multiple areas of support. And as such, the oscillators are going to begin turning up from these levels. And it looks as though the move has already started, that being the difference between Wednesday and then, of course, Thursday's session as well. Now, if I can keep the theme going when it comes to, I guess, the oscillators, or at least just simply overbought, oversold, I can begin to speak about DAL. DAL was another stock that we had publicly on this channel here, and we were looking at jumping into this at $51.90. Well, this has begun. I mean, first of all, it sort of moved sideways for a little bit. That wasn't any concern whatsoever. But over the past week and a half, it's really begun to take off, and it's starting to sort of take flight, especially on Friday. And you can see for yourself that volume is starting to flow back into DAL. This is obviously helped by, I guess, the relief in oil prices at the moment, but this is just performing very, very well. If you took those call options at 51.90, you can see about 2 weeks later now, we're trading up here at 55.87. This stock right here, although a very different company, was very similar to that of the PayPal sort of trade setup that we had a number of weeks ago as well. We traded, of course, the reversal here. I've, as of since anyway, deleted the entry point, but the entry point was very close to 72.50. And it just went up, and it hit our target just shy of $80, really a week later. So I didn't mean to actually sort of integrate or at least speak about PayPal, but it was a pretty decent segue. The reason for that is because we understand that the backdrop to the market indices is bullish, and what we're seeing is a bunch of stocks coming back down to their support areas, which is oscillating, or at least working quite nicely in conjunction with these oscillators moving into short-term oversold conditions. And then we're just playing the bounces strategically off from a lot of very decent pivot points. And that's really as simple as you need to make trading. You don't need to overcomplicate it. And a bunch of these positions are working out quite nicely. So when I move back into Delta Airlines, you can see for yourself a very similar play. At a macro support area, oscillators are moving into oversold conditions. It's working very close to that of a trend line as well. And you can see again, just the mentality of traders jumping on board as it continues to move higher. And the good news is that a lot of people are still holding this. I myself am still holding DAL, and there's really no reason to liquidate this trade at the moment. I mean, we've got this target up here. This is coming in at 56.50. So from where we currently are, there's a good 70 cents, 80 cents still to move on this. But if we continue to crack above this resistance area, and there is a very good chance that we do this in the early period of June, there's all likely that Delta Airlines, so to speak, is going to rally all the way up to $59. And that's going to be a tremendous move. And this may happen relatively quickly or within that of sort of a 1 month sort of time frame, which is fantastic, of course, when you integrate options into these trades as well. So I needed to update you on DAL. Now, what is surprising also, and this is where I guess a little bit of opportunity flows into it, is that LUV is obviously a close cousin to DAL. And as you can see, we haven't really gained as much traction, or at least made as much inroads in terms of price movement or price action. We were interested at the pivot at 51.39. It looked as though we were beginning to gain traction. What happened? We sold on off again. what we did is we short-term priced in a lower low, and with this lower low, we started to develop that of bullish divergence, ever so slight bullish divergence. But as you can see, this rally, which is starting to take place on Thursday and Friday, is starting to really get moving, which is exciting. I mean, more or less, we're above 51.39 again, but we're right back at that 52.77 handle that we've been looking to trade, essentially the reversal back up to those very similar areas of resistance, which are going to become our targets as well. So there's a good chance that LUV is going to catch DAL. And that prices us up at $58 and also $61 moving forward. We're starting to see, of course, some pretty decent volume on the upside as well. And this is just looking like an exhaustion type of move. This is what spooked my interest on LUV. This particular candlestick here, this was earnings related. It gapped down. It sold off during the session, but the people came in, or the traders came in anyway and bought the actual earnings announcement. And this is what was starting to begin that of this exhaustion type of move to the downside. Along lower wick, we came on back down into it, and then we started to see a series of white candles working in conjunction with LUV being relatively oversold, and also on the weekly chart coming back down again to a very important area of support. Now, the weekly candlestick I addressed yesterday, it is a high wave spinning top, but pay attention to volume. Volume is starting to spike on LUV as well. So this is something that you could put on your radar. Again, it hasn't moved as far as DAL, but there is every opportunity that over the coming weeks that this is really going to get started. It may be a little bit ugly. It may be that of a bit of a grind, but we might see this at higher prices up towards 58 or 59 over the coming weeks as well. So I wouldn't want you to sort of be blindsided by this potential price action that is going to happen in LUV. We did go through a bunch of other additional trades in that pro analysis class yesterday. So again, I encourage you to have a look into that. It is about 1 hour and 30 minutes of analysis. I think we recapped very close to probably 17 individual trades, or not actionable trades, but we performed analysis on maybe 17, if not more, different charts, which gives people a lot of opportunity and an understanding of what to expect in the markets as we move into this abbreviated week's worth of trading. Now, the only stock at this particular point that has given us troubles is EWZ. It was a very similar type of trade setup. Not many people, I guess, speak about their losers, but EWZ, we cannot shy away from it, and it is a loser at this particular point. It has been a pretty abrupt seller from 42 down to 37. You're never going to be perfect in the world of analysis. Don't let anyone try and convince you that you're going to be right 100% of the time. No one is. So, no one's perfect, and no one's perfect in their analysis. But this has really been, so to speak, a thorn in my side, and probably a thorn in other people's side when it comes to the overall P&L of what we've been achieving over the past number of months. Okay, so a very good learning opportunity. Always trade with stops. Okay, when the trade starts to move against you, for those that will ultimately move against you, cut your losses and move on to additional, or at least other stocks that are moving in the right direction. Okay, cut your losers and let your winners run, as they say. And EWZ has been getting clobbered. There's a good chance, however, that this is going to price in that of a V bottom. There's also a very good chance that 37.25, more or less where we're currently trading, is going to be the bottom if anyone is holding on to EWZ. And it is just a recap, so to speak, of support breaking. X marks the spot not working out, and then ultimately getting the kiss, the retest, and which is what people call the kiss of death, and then the subsequent sell-off. Ultimately, this is going to exhaust itself, and what you may see anyway is a very, very strong reversal, which will ultimately make a V, and then this will become that of that decelerating fan line of that broader sort of bullish uptrend. Which I still think is going to resume itself once, of course, the pressure is alleviated by the reversal on the US dollar, which is going to work into that GLD trade that we're already in as well. So a bit of multi-market analysis, or at least looking at a broad sort of selection of individual stocks and also ETFs with this market address. Again, if you have any questions, please email me, success@pivotpoint-trading.com. I think that's going to do us. I will bring you some additional market updates, of course, during the week, and probably recap a bunch of trades that are continuing to trend, or at least potentially that we get triggered into over the coming 4 sessions. I think it is going to be a rather volatile and sort of explosive week. Even though it is going to be a shortened trading week, that doesn't mean that there isn't ample opportunity. There is, trust me, a lot of opportunity out there. And the good news is that you should be taking advantage of some of these stocks that have been moving in our direction, that are very favorable, and at the same time not looking to actually jump out or liquidate, so to speak, Netflix or any of these other ones that potentially are very early on in a multi-week, if not multi-month type of trend continuation, which is very exciting as well. So On that note, everyone, I'm going to say farewell. It is James signing off on behalf of Pivot Point Trading. Enjoy your long weekend again for my US friends. For those of you not as fortunate, that's okay. Your time will come. Outside of that, everyone, I'm going to say farewell and enjoy what remains of my weekend. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.